You're listening to Mortgage 101 with Clinton Wilkins and myself, Dan Olstrand.
On today's episode, we're joined by Chris Johnson, who talks about helping consumers become homeowners sooner.
Why high-ratio mortgage insurance is important for first-time home buyers.
And how the upcoming federal government enhancements will allow first-time home buyers longer amortizations, giving more Canadians a chance to qualify for a home. I really wanted to bring you in because there's been so much noise in the media around things going on around high-ratio insurance. And obviously there's three insurers, and we're going to let you explain a little bit to us. But why don't you just give us a high-level overview of what does Sagen do? Who are your competitors? Why someone needs high-ratio mortgage insurance?
Absolutely. And it's an interesting point because really what we do is sort of in the background. And so we work with partners like yourself, Clinton, as a mortgage professional, and the lenders that you use. But often we're not seen by the average consumer who's buying a house. We're there if there's less than a 20% down payment, but people don't always know that we're in the background. So essentially where Sagen comes in is if somebody is buying a home and they have less than a 20% down payment is usually when we're engaged. That's a federal law within the Bank Act of Canada. So anybody that is buying a home has to have the insurance. Right. So it's really not a choice. It's either you have it or you don't based on your down payment.
Yeah, you either get approved for the insurance or you're putting down 20%, or you're not buying that house.
Or you're not buying a house, exactly. Right. That's right. And you're right, during COVID and through the pandemic, there was, prices, of course, were going up and people were having a hard time getting down payments in place to buy and looking for a lot of options. And that's really where high ratio insurance can certainly come in.
What are people buying when they buy insurance? Like, what do they get in return for that money?
So essentially what they get is really access to a home a lot quicker. That's how I always describe it. Because when I was in lending, people would say to me, because there's of course a premium involved, they'd say, do I have to get this or can I wait and avoid it? And the reality is if you wait too long, you're actually missing out on a huge opportunity because like you said, Clinton, you have to save 20%, right? So that can take a long time. In fact, it could be, years and years of saving.
It could be decades, really.
It could be decades, depending on how much, especially with house prices being where they're at now, they're much more expensive in many markets. And so it's more down payment. So high ratio mortgage insurance allows people to get in with as little as 5% down and get access to being a homeowner versus saving for that 20. So, you look in Halifax, for example, I coming in today, I looked to see what the average insured mortgage with Sagen is. And it's $490,000 in Halifax.
Wow. So
if you wanted to buy that home with 20% down, $98,000 down payment versus $24,500.
Which it's huge. And that really, 5%. It's going to enable like a whole other, category of buyers to get in.
Yes.
I hear it. And, even in 2019, we have done so many pre-approvals and clients just are so adverse sometimes about paying the insurance that they're like, oh, I'm going to wait. Those buyers that didn't buy in 2019 and that are going to buy in 2024, 2025, huge spread. And I think in some cases, they just gave up on the 20% down and they're getting a high ratio mortgage anyway. But how much further ahead of the game would they have been in terms of building their net worth, in terms of building their assets, if they would have bought in the moment? And it's just shocking to me.
And the other thing people don't often know going into it is you can add that premium, at least in the province of Nova Scotia. It does vary across the country, but in Nova Scotia, you can add it right into your mortgage.
Right.
So it's not like you have to write a check for that amount. You basically can add it into your mortgage and pay it off over as you pay off your mortgage.
Yeah, which is great. And essentially the first dollars these customers are paying down is really the cost of the insurance. That's the way that I position it to them. And it's very different in the U.S. though. In the U.S., you pay a premium almost on every payment, but in here, it's an amount that's capitalized, and you can pay it down, which I think is great. Now, there's been lots of noise in the media around high ratio insurance. I know we kind of teased that a little bit, and some changes that are coming. So, Chris, I think we're still waiting for some of these finite details, but maybe give us a high-level overview of some of these commitments that the federal government has come out that's going to impact Sagen and really home buyers?
Yes, exactly. So one thing, I've been 19 years earlier this month with Sagen, and in that 19 years, one thing I've learned is change is a constant. And you know this
yes.
from your many years in mortgages. So you got to just fasten your seatbelt and hold on for the ride, because there's lots going on. And
the pendulum swings.
And the pendulum swings. And in this case, this is actually the changes that have been announced I really refer to them as enhancements to what we've got now, because what it's doing is allowing for certain buyers, so first-time home buyers who are buying either a new construction or, as of December 15th, when the changes roll out, also resale property, to extend up to 30-year amortization. Right now, for insured mortgages, it's 25 years.
Right.
So that's going to help to lessen that payment impact a little bit. Affordability, of course, is everywhere. With prices going up, people are looking for any way to save on their biweekly or monthly payments. So that's going to be a huge help for those first-time buyers. But the December 15th changes also extend to people who aren't first-time home buyers if they're buying a new construction. So really, it's going to allow all Canadians to get access to that as well. So it's exciting news for people to be able to see that. So.
Well, when we're hearing all these struggles around affordability and clients, qualifying, and we talk about the stress test, having the longer amortization is going to help.
Yeah, no question. Absolutely. I mean, it's going to help when you look at the average payment difference. It's certainly going to lessen the payment burden for people. Mm-hmm. But I think the other thing, and you mentioned earlier, through the pandemic, there was a lot of sort of media around, people can't afford this or they can't afford that. I think it's these steps in that direction are going to get people who've maybe been sitting on the sidelines to go back and run those numbers again and say, okay, you know what, maybe this is a time for me to go back and see if this is something that I can do. And because they have changed. So yeah.
What's the definition of a first-time home buyer? Is it somebody that's never owned a property before, or does that change depending on the circumstance?
Generally speaking, yes, there's actually a sort of a specific definition, which I would implicate myself without having it to read right now, but there's very much a specific sort of bullet points of what you'd need to qualify for that. So that would be where you'd want to make sure you talk to a professional about whether you qualify for it. But
and some of the writing on these policy changes still haven't rolled out, so we're not really even 100% sure on what the constraints are going to be. I know from even the federal government perspective, when we talk about things like the RSP withdrawal program, the home buyers plan, if someone had been separated or divorced, even if they've owned a home before, they're able to qualify as a first-time home buyer. So I'm going to be curious if those same rules are going to apply in your sphere with the high ratio insurance. So I guess we'll be staying tuned. I'll be very interested to see really what rolls out by the time the launch happens here in December.
Yeah, it's exciting. And beyond the 30-year AM, another announcement that just came out, and again, it's December 15th, is anybody purchasing a home over $1 million has always been limited to having to put down 20%. That's changing on December 15th to go up to 1.5 million. So certain markets are going to be more impacted by that.
Like the GTA, GVA.
No question. Yeah, you go to the larger centers, but your average house price, even here in Halifax now, is up into the high fives. Now we've still got a ways to go to the million, but we do have $1 million properties around here, and certainly those north of that. So for those people who might, for financial planning reasons, maybe put less down or want to put less down, it's an option for them now. So we'll see what the impact of that will be.
And by and large, borrowers get a better price on a mortgage in terms of an interest rate with a high ratio insured mortgage. Typically, at least from my perspective, if they have the insurance, that is really taking a lot of the risk off of the lender, and they are able to potentially package the deals and sell them in the background to get customers a lower interest rate. So the optics of the actual transaction may become more interesting, starting soon around the interest rate, around the insurance. So we're certainly going to be having some different conversations, I think, with borrowers than we're having right now, at least from my perspective. I don't know, Dan, do you have some more questions for Chris?
Chris, obviously, if we explained it that if you're under 20%, you have to have this product attached to your mortgage, and there's only 3 companies in the country that do it. Is there a reason why that there's only 3 that
and is there a difference between the 3?
Yeah, really great question. So this is something that goes way back to just after World War II, where the federal government actually created, and I'm sure this is a name a lot of people will know, CMHC, so Canada Mortgage and Housing Corporation. And for a number of years, they were really the only mortgage insurer that had access really to provide any kind of high ratio. And then Sagen, which at that time was actually called something different, GE Mortgage Insurance back in the day. And we were the first private insurer to come in and really kind of mix things up a little bit and sort of bring in some new products, some new ideas. And that sort of really created a bit of a runway for the third private to come in and offer similar types of services. At the end of the day, we insure the lender. So when you think of insurance, often you think about someone getting insurance on their
like
home,
the borrower, the homeowner.
Mm-hmm.
So we sort of grant access to a buyer to get into the home, but ultimately default insurance, which is what we do, is insuring the lender. So if there is a default in the mortgage, so if there's a foreclosure or somebody can't pay their mortgage anymore, essentially what we do is step in and a claim is made to the default insurer, and then we work with the lender essentially to pay them back any losses they have. So it's a risk control thing here in Canada where anybody who has less than 20% down, we do have not only someone to insure it, but another set of eyes to underwrite it, which is really, when you look back to the financial crisis years and years ago, we came out of that extremely well. And I think a lot of the reason for that is how we're set up here in Canada.
Well, and I think the insurers have a stake in this too. It's not just the lenders working on their own. You know, if things are going wrong, you guys have programs that you can help homeowners.
We certainly do. Absolutely.
Which I think is really important. Like when we think even during COVID, people got laid off, you know, they lost their jobs in some cases. And, you know, the banks got in and did their, deferrals and things like that. But the insurers just work so directly with the lenders to even like rework potentially a mortgage to try to keep homeowners in their homes.
Absolutely. And that's something you asked earlier about the differences between insurers. And certainly everybody offers a default program.
Mm-hmm.
I can sit here very proudly as a Sagen employee for many years and say that is something Sagen does extremely well as homeowner assistance. It's really a customized solution that we work with the lender, sometimes with the customer in order to be able to see what can we do to help them, especially lately in the last few years with so much going on in the economy and inflation through the pandemic. There's been a lot of questions around that. So it's a major value for customers, for buyers.
And my question piggybacks on that. We know that the financial situation, particularly here in Nova Scotia, hasn't been the best as of late. We're hearing a lot of people with affordability issues, a lot of people with financial issues. Are you seeing a lot of people defaulting on their mortgages? Are you having to use your products?
So far, the actual default, because of programs like homeowner assistance, the actual defaults have not spiked in any way as of yet. I mean, obviously, we're still working through.
It's just this renewal cliff that everyone says is coming. I don't
Exactly.
know if it's actually going to come or not, but I guess I'm optimistic that things are going in the right direction. But
I think because of the fact, like we have the stress test, for example, which won't get into all the details of that, but gave a bit of a buffer from an interest rate perspective and helped get us in a good situation so that we haven't seen that.
And hopefully we won't, because we don't want to see anybody at their home, right?
Of course, and nobody wants to see that.
If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.